Hey everyone, and welcome back for another deep dive. Today we are going deep into JD.com, cracking open their 2023 annual report.
JD.com.
Yeah.
Look at that.
You should probably know them for online shopping, right? But we're going way beyond that.
Way beyond.
We're exploring their business structure,
Okay.
their financials, and really how they're working to deliver value back to shareholders.
Yeah.
Get ready, because JD.com is way more intricate than just a website.
Oh, it is. It's fascinating how most people just don't realize that JD.com is structured as a Cayman Islands holding company with this intricate network of subsidiaries and variable interest entities
Wow.
operating within China.
So let's unpack this a bit. We know that JD.com is huge in the Chinese e-commerce space, but the report reveals it's not a one-trick pony,
No.
right?
No.
They've got multiple business segments all working together.
Yeah, you're absolutely right. Well, e-commerce is still their bread and butter. They've strategically diversified into logistics services, even branching out into health with JD Health and real estate with JD Property.
It's impressive.
It is.
So let's dive into these segments, starting with their core. E-commerce. The report emphasizes their focus on customer experience, authentic products, competitive prices, and super fast fulfillment. It's like they're hitting all the right notes for online shoppers.
Yeah, they've really built a reputation for that reliability and speed,
Right.
which is absolutely crucial in a market as competitive as China.
For sure. And speaking of speed, their logistics network is something else.
Oh, yeah.
They didn't just outsource it, they went and built their own nationwide infrastructure.
Wow.
Over 1,600 warehouses and a massive workforce.
Yeah, that's commitment.
That's commitment. But the report also mentions rising personnel costs in China. Could that put a strain on this ambitious strategy?
It's something to watch, for sure. While having their own logistics network gives them a significant edge in terms of control and efficiency, it does also expose them to fluctuations in labor costs. It's a delicate balance to maintain.
What I find really interesting is that this logistics network might be a gold mine in itself.
Yeah.
Could JD.com leverage this infrastructure to serve other businesses, even competitors? It seems like they've built a powerhouse that could have a life of its own.
It's a really thought-provoking idea. Imagine if they turned their logistics network into a platform like Amazon Web Services, offering their expertise and infrastructure to a wider market.
Wow.
That would be a bold move,
Yeah.
but it could be a game changer.
Okay, so let's shift gears a little bit to JD Health and JD Property.
Okay.
These are a bit newer to the scene, but the report hints at some pretty innovative approaches.
Yeah. JD Property, for instance, has this really clever funding model. They sell completed logistics facilities to property funds and then lease them back.
Oh, wow.
It's like a financial juggling act, freeing up capital for further expansion while still maintaining control over the assets.
That's pretty ingenious. Shows they're thinking outside the box when it comes to funding their growth. But of course, each of these new ventures comes with its own set of risks and opportunities.
Absolutely. JD Health, for example, operates in a heavily regulated industry, and they'll need to navigate those complexities really carefully. But the potential for growth in the healthcare sector is enormous, especially in a market like China.
So we've explored these different business segments, each with its own story to tell. But to really understand JD.com, we need to look at the big picture, their overall financial performance. And guess what?
What?
They've had quite a turnaround.
Oh, you're referring to their swing from a net loss in 2021 to impressive net income in 2022 and 2023, right?
Exactly. The numbers tell a compelling story of growth and strategic decision-making.
Yeah.
So let's delve into those financials and see what's driving this success.
Love it. Let's start with the income statement.
Okay.
We'll unpack the reasons behind this financial turnaround, breaking down key metrics like revenue and cost management, and see how those factors contributed to their bottom line.
All right, let's break down these numbers.
Yeah.
I always find financials fascinating.
Me too.
They reveal so much about a company's strategy and performance.
Yeah, they really do. And in JD.com's case, the income statement reveals a dramatic shift from a net loss of 4,467 million RMB in 2021
Wow.
to a net income of 9,691 million in 2022.
Okay.
Further surging to 23,257 million RMB in 2023,
Wow.
which is 3,275 million US dollars.
Talk about a glow up. What fueled this impressive financial performance?
Yeah.
The report hints at revenue growth, strategic cost management, and gains from those property sales we discussed earlier.
Exactly. Looking closer at their revenue, we see e-commerce still reigns supreme. But what's really catching my eye is the growth in net service revenues.
Okay.
Things like marketplace fees, marketing services, and those logistics services we were just talking about. It seems like diversifying their revenue streams is paying off.
And don't forget their mobile-first approach.
Oh, right.
The report highlights that over 90% of orders in 2023 were placed through their mobile apps.
Wow.
Talk about tapping into that mobile-savvy consumer base.
Yeah, absolutely. They've clearly tapped into the mobile-savvy Chinese consumer base.
But strong revenue is only part of the equation.
Right.
What's equally impressive is how they've managed their costs.
Oh, for sure.
Keeping costs in check is crucial for any business, especially in a rapidly changing market like e-commerce.
Absolutely.
The report breaks down their cost of revenues into major components: fulfillment, marketing, research and development, and general and administrative expenses.
Oh?
So where have they found efficiencies?
Well, their fulfillment expenses, which are usually a major cost for e-commerce companies, actually decreased as a percentage of net revenue between 2021 and 2023.
Interesting.
That suggests they're becoming more efficient at getting those packages delivered, likely thanks to that impressive logistics network we discussed.
So those investments in their own logistics infrastructure are really starting to pay off.
Yeah.
But what about marketing expenses? You'd think in such a fiercely competitive market like e-commerce, they'd have to keep pumping money into advertising.
Interestingly, the report shows a slight decrease in marketing expenses in 2022, particularly for JD Retail and Jinxie.
Wow.
It seems they're carefully optimizing their marketing spend for better returns, perhaps leveraging data and targeted advertising to reach the right customers more effectively.
It's like they're playing chess, making strategic moves to outmaneuver the competition while keeping a tight rein on their budget.
Precisely. Now, let's move beyond the income statement and take a peek at their balance sheet.
Okay.
It gives us a snapshot of their assets, liabilities, and equity at the end of 2023.
Okay.
What stands out to you?
Well, one thing that immediately caught my eye was their robust cash position.
Yeah.
176.3 billion in RMB and 13.9 billion in US dollars as of December 31st, 2023.
That's a lot.
That's a hefty war chest. It gives them a lot of flexibility for future investments, potential acquisitions, or even returning value to shareholders.
You're right that strong cash position is a definite strength. It not only allows them to weather potential economic storms, but also provides the financial firepower to pursue growth opportunities. It's like having a safety net while also being ready to pounce on new ventures.
Speaking of playing smart, their inventory management also impressed me.
Yeah.
They have this massive product selection, yet their inventory turnover days remain stable around 30 days.
Okay.
That means they're efficiently moving products without tying up too much capital in unsold goods.
It's a sign of a well-oiled machine, especially considering the seasonal fluctuations in e-commerce.
Right.
They must have a sophisticated system for forecasting demand and managing inventory levels.
All right, so we've covered the income statement and balance sheet, but what about the cash flow statement? That tells us how cash is flowing in and out of the company.
The report highlights strong cash flow from operations, which is a healthy sign. This means their core business is generating enough cash to fund their day-to-day operations and investments.
Right.
It's like the engine of the business is running smoothly, generating the fuel it needs to keep moving forward.
That's a good sign for investors.
Yeah.
It suggests they're not overly reliant on external financing to fuel their growth.
Exactly. They're generating cash organically, which gives them more control and stability. Now, let's dive a bit deeper into the breakdown of their cash flows.
Okay.
Their investing activities mainly focused on short-term investments, long-term time deposits and wealth management products, property, plant, and equipment, and strategic acquisitions.
So they're strategically deploying their cash in a mix of short-term and long-term investments.
Yeah.
It's like they're planting seeds for future growth, while also ensuring they have enough cash on hand to weather any unexpected storms.
You've got it. And then there are their financing activities, which involved raising capital through debt and equity offerings, as well as repaying existing debt.
Right.
It's a constant balancing act, ensuring they have the right mix of debt and equity to fuel their growth, while also keeping their financial risk in check.
Right. They need to find that sweet spot between leveraging debt to accelerate growth and maintaining a healthy debt-to-equity ratio. But let's not forget about the potential impact of foreign exchange fluctuations on their financials.
Oh, yeah, that's an important one.
They operate primarily in China, where the currency is the RMB, but they also deal significantly in US dollars.
That's a crucial point. Fluctuations in the RMB-USD exchange rate can have a significant impact on their reported financial performance,
Right.
even if their underlying business operations remain strong.
It's a reminder that we can't analyze their financials in isolation.
Yeah,
We need to consider the broader global economic context.
for sure.
It's like trying to hit a moving target, navigating these currency fluctuations while steering the company through its long-term goals.
Mm-hmm.
But hey, speaking of hitting targets, there was one detail in the report that really caught my attention,
Oh, yeah.
and it wasn't even a financial figure.
What was that?
The report mentioned that JD.com's chairman purchased a private aircraft,
Okay.
and the company covers the maintenance and operating costs for business use. While the report states these costs are insignificant, it did make me wonder about corporate governance and potential conflicts of interest.
That's a fair point. While it might seem like a small detail, transparency in such matters is crucial for maintaining investor trust. It's something investors might want to keep an eye on.
Agreed. Now, before we move on to shareholder value creation, I'd like to touch on one more important aspect of financial health: free cash flow.
Okay.
It's a key metric that shows how much cash is left over after a company covers its operating expenses and capital expenditures. It's the cash they have available to invest in growth, pay down debt, or return to shareholders.
You're absolutely right. Free cash flow is a vital indicator of a company's financial strength and flexibility.
So what does the report tell us about JD.com's free cash flow?
Well,
Because I didn't see a figure.
the report doesn't explicitly state the free cash flow number,
Yeah.
but we can glean some insights from the information provided. They have strong cash flow from operations,
Right.
and while they're investing heavily in property, plant, and equipment, their overall capital expenditures seem manageable.
Okay.
This suggests they're likely generating a healthy amount of free cash flow,
Okay.
which is a positive sign.
That's a reasonable assessment. Strong free cash flow gives them options and puts them in a good position to navigate challenges and seize opportunities as they arise.
Exactly.
Okay, so we've covered a lot of ground with their financials,
Yeah.
from revenue growth and cost management to their cash flow and free cash flow. Now let's shift gears and explore how they're using their financial strength to create value for their shareholders.
Sounds good to me. Let's dive into those shareholder-friendly initiatives, particularly those dividends and share buybacks you mentioned earlier.
All right, let's talk shareholder value.
Yes.
The report highlights a couple of key ways JD.com is rewarding its investors.
Yeah. First up, that massive $2 billion special cash dividend.
Wow.
Approved in 2022.
$2 billion.
That's a pretty substantial payout, signaling a clear commitment to returning value to shareholders.
It definitely gets investors' attention.
Absolutely.
But dividends aren't the only tool in their arsenal.
Right.
The report also mentions share buybacks
Yes.
as another way they're returning value.
Right. And share buybacks can be a savvy way to boost earnings per share.
Okay.
When a company buys back its own shares, it reduces the number of outstanding shares,
Right.
which can increase the earnings per share for the remaining shareholders.
It's like concentrating the value
Exactly.
among a smaller pool of shares.
Exactly.
So it's not just about giving cash back. It's also about strategically managing the shares themselves.
Yeah.
But as we've seen, JD.com is playing a long game.
Yes.
These shareholder-friendly moves need to be considered alongside their overall growth strategy.
Absolutely. Those juicy dividends and share buybacks are great, but long-term value creation really hinges on a company's ability to execute its growth strategy effectively.
For sure.
And with JD.com, we're talking about continued expansion in e-commerce,
Right.
leveraging their logistics network,
Right.
and skillfully navigating those regulatory and competitive challenges we've been discussing.
It's that balance, right? Keeping investors happy in the short term while also investing in the future.
Yes.
But speaking of challenges,
Yeah.
we can't ignore the elephant in the room.
What's that?
JD.com's complex corporate structure.
Yes, that Cayman Islands holding company with its web of subsidiaries and variable interest entities operating within China. It's a common setup for companies based in China,
I see.
allowing them to navigate certain regulatory restrictions on foreign investment.
Okay.
But it's not without risks, right?
Right.
The report highlights that the Chinese government still has significant authority
Yeah.
to regulate JD.com's operations,
Okay.
and they could potentially challenge those contractual arrangements
Right.
with the variable interest entities.
So while this structure has its advantages,
Yeah?
it also comes with a level of geopolitical and regulatory risk that investors need to carefully consider.
Precisely. And those aren't the only legal and regulatory hurdles they face.
Okay.
The report also dives into some of the challenges they face, both domestically and internationally.
One area that stood out to me was data privacy.
Yes.
JD.com collects a vast amount of personal information from its customers, which is the lifeblood of e-commerce.
For sure.
But China has been tightening its regulations around data protection.
Yeah, it makes sense given the global concerns about data breaches and misuse. It's a critical issue. The report mentions that JD.com is diligently updating its privacy policies and investing in cybersecurity measures to comply with these regulations, but it's a moving target.
Right.
They'll need to remain vigilant and adapt to any new regulations that emerge.
It's like a constant game of catch-up, trying to stay ahead of the curve in a rapidly evolving regulatory landscape. What other legal challenges did the report highlight?
Intellectual property infringement claims are another risk factor. JD.com relies heavily on its trademarks, copyrights, patents, and proprietary technologies.
That makes sense.
Protecting those intellectual property rights is paramount, but enforcing those rights can be complex and costly, especially in a global marketplace.
It's a constant battle for companies in the tech space.
Yeah.
Especially in a fast-paced market like China.
Yeah, it's like trying to protect your secret sauce while everyone's trying to figure out the recipe.
And speaking of challenges, let's not forget about the complexities of managing their massive workforce.
Oh, that's right.
The report acknowledges the risks associated with a large and diverse workforce.
Yeah.
From ensuring fair labor practices to navigating cultural differences.
Yeah, and let's not forget the potential for labor disputes and strikes.
Right.
Those can be disruptive and damaging to a company's reputation.
Of course.
Not to mention their bottom line.
So we've covered a lot of ground today.
We have.
Their diverse business segments, impressive financial performance, shareholder-friendly moves.
For sure.
And the complex legal and regulatory landscape they navigate.
It's a lot.
What's the final takeaway for our listeners?
JD.com is a fascinating case study in the world of e-commerce.
It really is.
They've achieved remarkable success in a fiercely competitive market, but they're not without their challenges.
Right.
Their future success hinges on their ability to continue innovating, adapting to evolving regulations, managing their workforce effectively, and potentially expanding their global footprint.
It's a story that's still being written.
Yeah.
And their 2023 annual report provides a valuable glimpse into their inner workings. But it's just a starting point.
Exactly. It's up to each of us to continue exploring, asking those critical questions, and drawing our own conclusions about JD.com's journey.
So to wrap things up, what are some of the key questions our listeners should be pondering as they delve deeper into JD.com?
Well, the competitive landscape in China is always shifting.
Right.
Can JD.com effectively fend off rivals like Alibaba and continue to attract new customers? How will they navigate those evolving data privacy regulations and intellectual property challenges?
And can they successfully translate their business model to new markets as they pursue their global ambitions?
That's the big question.
These are all questions worth exploring.
Absolutely. And remember, this deep dive is just the beginning.
Exactly.
Keep digging into those source materials.
Yeah.
Connect the dots and form your own informed opinions. That's what makes exploring the world of business so rewarding.
Until next time, keep diving deep.